You're tracking every coffee, switching energy providers to save $20, maybe even stressing over how much avocado you buy, but your saving account still looks like it's on life support. Ever feel like you're doing everything right and still going nowhere? Well, here's the truth. Most of what you do with money doesn't actually matter. At least, not as much as you think. Because in personal finance, it's usually the 20% of your actions that drives 80% of your results. And the rest is mostly just noise. Welcome back to Wild Part X, Tony here. Today's 18th of April 2025. Here on this channel, we break down the biggest idea in money, investing, crypto, and psychology. If you're serious about getting ahead in finance, hit that subscribe button so we can do this together every day. Let's kick things off with what's moving in the market. Or not moving, depends on today's situation. Bitcoin is holding steadily around $84,000. Not much movement in the last 24 hours. Ethereum, on the other hand, is still looking pretty weak, sitting just under the $1,600 mark with no clear breakout in sight. But as we mentioned many times before, this kind of sidewave action is actually a textbook moment where dollar cost averaging actually pays off the best. It's boring for sure, but a lot of times it's often the boring strategy that built the most wealth in the long run. In the stock market wise, Apple is now trading at $196, bouncing back after the minor slump last week. Tesla is sitting at $241 as of this morning. So nothing explosive really, but the broader tech market is showing some resilience. Right, in today's morning deep dive, we're talking about the principle that might completely shift how you approach your finance. It's called the Pareto principle, or you might have heard of the 80-20 rule. And it came from Italian economist Vilfredo Pareto. He noticed back in the 19th century that 80% of land in Italy was owned by just 20% of the people. Later, this pattern was seen everywhere, in business, nature, productivity, and of course money. And what's interesting is that in personal finance, a lot of time 80% of your results tend to come from 20% of your action. The irony is that most people spend 80% of their time fussing over stuff that barely moves the needle. We're obsessed with finding the next 100x altcoin or shaving $10 off our grocery bills, but we ignore the heavy hitters, the simple system that compound over decades. So what are those 20% actions that actually gives you 80% of the results? Well, first, think about automating your investments. That one decision means you're consistently building wealth no matter what the market is doing and no matter how you feel that day. That's before paying your mortgage or rent, before the bills, before the cheeky Nando's or the pineapple pizza you want. Make sure you're investing in your future. And also it's really important to avoid debt traps. It's not sexy, but staying out of high interest debt is one of the biggest financial power moves you can make. And the last and perhaps the hardest one, holding through market volatility. Not checking your portfolio every 5 minutes actually helps. Not panic selling because some silly headlines that media puts up. Just letting compounding do its own thing. Well, now let's flip it and see what actually happens if you're obsessed with the wrong 80%. That's when you fell into the FOMO trap, chasing meme coins at the top, selling solid investment because of a red candle in the chart, trying to trade earning report when you haven't even looked at the company's fundamental. This is why we call it the shiny object syndrome, consistently jumping from one hyped up trend to the next, thinking you'd be productive when you're really just spinning your wheels. One of the perfect case here is none other than Mr. Beast. Now stay with me, I know he's not a finance guy, but hear me out. Jimmy Donaldson didn't become the biggest YouTuber in the world by doing everything. He focused obsessively on just one thing, making the best video possible. Everything else, merchandise, businesses, side projects, they all followed from that 20% focus. In his own words, I've made 100 videos that got less than 1,000 views. The first couple years were terrible, but he stuck with the 20% that worked. And now the 80% takes care of itself. To quote Bruce Lee, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. In other words, focus. In finance, just like in martial art or anything else, success often comes from doing a few things very well and ignoring the rest of the noise. So today's challenge is simple. Identify the 20% in your financial life that drives the results and double down. And the rest is probably just distraction dressed up as productivity. Now let's take a look at today's top news. The first news, Donald Trump is back at it again, calling out Fed Chair Jerome Powell, this time with more heat. In a post on Truth Media he posted yesterday, Trump accused Powell of being too slow to cut interest rates, especially now that inflation is falling. He pointed out that European Central Bank has already taken action by lowering rates again, saying Powell is too late and failing to act appropriately. This ongoing feud not only signals political pressure on the Fed, but it also raises concerns about independencies. Trump's latest jab could mean that the monetary policy will continue to be a political football in his terms. The second news, over in Arizona, some major news for Bitcoin holders. A new bill, House Bill 2417, which would allow the state to create a Bitcoin reserves, just passed another hurdle, now heading to a third hearing in Arizona State Senate. If passed, this would position Arizona as one of the US states to hold Bitcoin as strategic reserve asset. The bill specifically stated that the state treasurer can invest in Bitcoin as a hedge against inflation and currency debasement. This is a big move and one that could signal a new wave of state-level Bitcoin adoption across the US. And the third and last news, let's talk about Netflix. The streaming giant just released its quarterly earning and it beats Wall Street expectation on both earning and revenue. Netflix pulled in $9.4 billion in revenue, with significant growth driven by its ad-supported tier and crackdown on password sharing. The company also offered a more optimistic outlook for the next quarter, saying that new content and international expansion will continue to boost subscriber numbers. There's great news for shareholders, and a subtle reminder that good content, when paired with smart strategy, still wins. That's a wrap for today's episode. Thank you so much for listening. If you found this video helpful, please like and subscribe for daily updates. Ride the waves, stay invested, and I'll talk to you again next Monday. Bye-bye.